In this video, we're going to talk about how to use price action rules to help us identify high probability setups and how to trade trending markets. The structure of this market is shaping out to be quite a strong downtrend working lower. We have series of lower highs, lower lows. The initial spike down played out with the break move to a new extreme, but prices keep trending lower. And you can see the trend is starting to flatten, 45-degree angle, and it looks like there has to be some additional spike and a channel pattern. And it's important for me as a price action trader to keep looking for these channels because prices are always part of some channel, especially if it is a trending market. And if I'm going to recognize the correct channel, I understand what is the directional bias and I know where is the key entry point. So I was looking for channels something like this. I'm going to connect two swings right here, copy it, put it at the bottom. The bias right now is bearish, two-legged pull back up after open, new high, first entry long, massive push below EMA, second entry long failure. Great first high probability setup for the day. Great failed second entry long, market continues to go lower. Now because the trend is down, I cannot be thinking about long opportunities. I want to be thinking about selling at the top of the correction phase, at the EMA or the key entry point. Now, we have potential short opportunity here, but because it is exactly around high impact news, I'm not going to be taking any setup. The single bar also is horrible and prices keep working lower. This right here is such an insignificant break. When the trend is strong, it looks more like there is slightly wider channel because right now the downtrend is quite strong. Pullbacks are tiny. New low can reset, first entry short, pullback, second entry short. Breakout, pullback. This right here is the second entry short and that's the high probability setup because we are right now in bearish downtrend and this is the second attempt to sell and this is great high probability setup. And remember, when the trend is strong, it may feel unnatural to be taking sketchy signal bars or selling a little bit too low or not full at the EMA. That's normal because strong trends, they tend to offer sketchy setups like this. But we have to follow price action rules and take these setups because that's how we have to trade strong trends. You can see minimal pullbacks, a lot of bars working lower, and this is right now a very strong downtrend. There is no denying that the bottom dropped lower and this is extremely strong downtrend. So what I have to do, I only focus on short opportunities. So I'm going to respect the short-term uptrend. We're correct. And we have a second entry short, but the uptrend is still in play. Horrible single bar. So I want to see a lower high confirmation setup. And now we have a lower high confirmation setup. When I was actually watching this live, I had a much different bar. I had more of a doji bar here without the bullish body. So when I was watching this live, if you're going to combine the resistance, a lower high confirmation second entry short at the EMA, this was great setup. Not really after I reloaded my data because the single bar is not that great. But when you're watching this live, you had better single bar, so great lower high. And market keeps working lower. I'm going to redraw the short term uptrend. So I keep resetting the count every single time new low is made. Okay, because I want to use price action counting technique to identify the right place on the chart where to enter. New low, first entry short, no break higher, no break higher, pull back. If there's going to be a break below this bar, there's going to be a second entry short. Now, as you can see, once again, you're selling quite close to these lows. But if you're going to zoom out, this is extremely strong downtrend. There is no way around it. This is how to trade strong downtrends. And this is great. High probability setup, second entry short. It is at the key entry point. It is at the EMA. Correction phase ended. And market keeps working lower. There is no other setup. You get a little setup here, but it's too far from the EMA. And then you have neutral signal bar. You're going a little bit sideways. You need to enter here. First entry short, but this is how you can tell that the downtrend is strong. When you can see first entry shorts working, that's a very strong downtrend being in play. I'm going to redraw the short term uptrend, new low. So pretty much you're looking for the same thing all over again. Okay, price action trading is fairly simple. That doesn't mean it is easy, but it is simple. We want to see once again the second entry short at the key entry point, but we are breaking above the EMA. So now you have a second entry short, but it's above EMA, and I want to see prices below EMA to confirm that this downtrend now is going to get new extreme, because following the trend line rule, this downtrend right now needs to get new low tested. So you understand how important it is to look for these channels, because now we're breaking the channel, we're not looking to go long. We know that the downtrend is going to continue and we are going to test the new extreme. So I want to see push below EMA and a lower high. Lower high above EMA, horrible bar, can't take it. So I want to see failed second entry long. There was no failed second entry long. Prices keep working higher. So I'm going to redraw a brand new uptrend because the first one played out with the break new high. Okay, first one played out and now I'm forced to redraw another uptrend. High low here. break new high even for the secondary channel, and now we have little failed breakout. We can see how we're working sideways. We broke higher, tested the new high for this uptrend. We broke above the initial trading range. Most breakouts will fail. I didn't take this setup because I was looking for push below EMA and a lower high, but it was a trading mistake because today is such a strong downtrend. It is a failed breakout, uptrend played out. It even visually resembles a two-legged pullback. This is great signal bar and a great failed breakout because you're selling high, faking the breakout. The downtrend needs to get new extreme, can get a lower high. Now we have a lower high, and even though signal bars don't matter as much when the context is good, this is still quite bullish. Had it at least been doji, you can consider. Now, I saw other traders on their chart, they had slightly better bar. So if you have a better bar, of course, this is a great setup. But on my chart, this is still quite bullish. Can get a failed second entry long. Now we have a failed second entry long again, but the problem is remaining. The bar is even worse. So great setup context-wise, but not real enterable on my chart and break new extreme, perfect price action. So you can see absolute perfect price action so far. A lot of setups to take advantage of. Breaking new extreme. So at this point, I'm gonna pause looking to go short because according to market cycle, we can have correction or reversal. However, if the trend is strong, there can be downtrend continuation. That is a possibility, okay? And today so far looks like it can be a very strong downtrend. But I'm not going to jump to conclusions. I want to see proof that there is a downtrend continuation. So I'm going to pause looking to go short, but I'm not going to go long because this was a strong downtrend. As you can see, we have a second entry short that worked, but we can't take it. We just had to break an extreme. Prices keep working lower. There is some bullish reversal attempt that failed, and prices keep trending this far down. Okay, so why are prices continuing to go lower after breaking new extreme? It looks like there indeed may be downtrend continuation. Okay, and this means we can be looking for additional channel. So let's see if we can get some nice fit. I'm gonna connect the top here, put it right here, and it fits well. Copy it, put it at the bottom. The structure is pretty nice. Still series of low highs and low lows. And this was the area where bulls were supposed to reverse the market. The fact that you're back below EMA trending lower, it really looks like the strong downtrend. That's the main bias, and it may continue. Now we have new low, first entry short, pullback, second entry short, broad two-legged pullback, second entry short at the EMA, great high probability setup. Market keeps working lower, lower high, too far from the EMA, we can't take it, too far down. Now I have overshoot. Okay, so I have to expect stronger correction working higher. There is no second entry short, new low, first entry short, second entry short. But had there been second entry short, I can't take it. After overshoot, it looks visually like a one leg working higher, so I need to respect the short-term uptrend. Break, I was expecting new high. That doesn't mean I'm thinking to go long. Of course, I cannot go long. This is a strong downtrend day. But I cannot sell because what if this uptrend is going to get the new high? Well, now that prices continue to go lower, it's clear that the bigger pattern is taking precedence. There's not going to be a new high, and I want to see a lower high breakout pullback. Now we have a lower high, but it didn't trigger. There is no trigger below the signal bar, so you can't take it because it formed an inside bar here, which is not that great. So no real entry, I have to be patient. Now we're selling too far down. No good entry. We have another test of the important key entry point. You can see how prices are reacting here. This is a good sign that this key entry point is valid. It is just a first entry short though. Can I get a second entry short? It is a tempting setup because it is off to make key entry point. I'm going to zoom back. You can see the market geometry is real because the prices are bouncing off of this trend channel line. This is where all the smart traders are selling. So there's a big chance smart traders will sell here as well. But, you know, first entry short, not the bad setup if you took it. It would have been better to get a second entry short that never formed. Now we actually have a second entry short, new low, first entry or second entry short. But it's right into these lows, now full at the EMA. You know, it's probably going to drop lower. Your gut feeling is telling you it's going to go lower. But it's very, very hard to enter. Market keeps working lower. The downtrend is still in play. You can see how nicely the trend line keeps holding. Redrawing the uptrend. At first, I had my trend line just a slightly wider. But then we broke below EMA, so I know, okay, according to rules, we're gonna test the new low of this downtrend. There's a break and move to a new extreme. So what I have to do, expect right now what? A failed second entry long, new high, first entry long. Push below EMA is confirming the bearish assumption, and we're gonna get the new low. So I want to see second entry long failure at the EMA and prices working lower. Okay, now we have a failed second entry long, but it's simply too far down, not at the EMA at all. There's a massive gap. I can't take it. This is too far down. It needs to form higher. Now this is what we call a failed second entry long continuation, because all the short sellers who sold this far down from the EMA at the bottom of the move, they got trapped, but the context still remains. We still need to get the new low. It is also bouncing off this important key entry point of this trend line. So this is decent failed second entry long. It's a little bit more advanced. It's not for beginner traders, but because this initial failed second entry long is so far down, untradeable, now this is the real pullback where bulls are going to get trapped. This is a new high first entry long, visual second entry long failure, but it's more advanced. You can consider. Market keeps working lower, breaking extreme. So I'm going to pause, looking to go short because market cycle played out. You can be looking for some wider channel, but let's say if I'm going to draw any wider channel, I'm skipping a lot of bounces here. You can play around with it somehow, but this was the secondary channel. Remember, the first one was the steeper one, and this is the secondary one. So the fact that already the secondary channel held so perfectly, that doesn't happen as often. So I'm definitely not going to be pushing my luck and widening the channel too much when it comes even to the secondary channel. So let's wait, we can get correction. Okay, no setup here. Flat EMA, move down, move up, move down, move up, move down, move up. So I can draw and predict potential trend range. Gonna redraw uptrend working higher, break, move to a new extreme, push below EMA, and now you have a lower high. Problem is this lower high is not confirming much. Downtrend played out. It's not confirming second entry short. Now you're confirming the resistance bounce, the key level bounce, but in a situation like this, when it is not clear context because downtrend played out, you prefer the failed second entry long, so this one is a little bit more aggressive. Push up, push down. Okay, this is massive spike down, so I have to follow short-term downtrend working lower. Downtrend needs to get new extreme. EMA keeps projecting, so I want to see second entry short. New low, first entry short, pullback. Can I get a second entry short? I can, but the signal bar is so messy. It triggered technically below this inside bar. Double bar entry is gigantic because the stop loss has to go here. This is a great setup context wise, but it forms so ugly. No way for us to enter, but still you can see that's the way how price action acts. Two-legged pullback, downtrend needs to get new extreme. Range held, no bullish reversal, break new extreme. You have a new low. I definitely cannot fade, even though it worked for a scalp. You cannot go long because why? I'm gonna zoom back. This is pretty much no-brainer. This is such a massive downtrend. This is such a strong downtrend. It's most likely just gonna keep working lower, keep working lower. This is typical. Okay, even after breaking new extreme, this is exception when the downtrend or uptrend is super strong. It will just keep going lower. There can be multiple wider channels in play, so I cannot go long. I cannot sell just yet because you have breaking new extreme, and prices keep working lower. So once again, why after breaking low we keep working lower, we keep working lower? That's because there is a bigger downtrend in play. So I'm gonna connect the swings. Prices keep working low. You can see how strong a downtrend this is. The market is just so bearish. Another overshoot. I'm gonna redraw a little bit wider uptrend. Cannot take second entry short because remember we had overshoot, first entry short, second entry short. What if this uptrend is gonna get new high? Now you have a lower high, which is very tempting because there is small support, resistance being formed. It's a great bar, but there was some massive push above EMA, and what if there's going to be new high? Once again, more aggressive trade. It's better to get a failed second entry long because that's the ultimate trap. Now you have a failed second entry long, and this is much better now because that's the bullish trap. New high, first entry long, second entry long failure. Downtrend needs to get new extreme. EMA keeps rejecting, but you cannot tell below bull bar. You have to use double bar entry, which means you have to wait for this bar, which is great, to get a trigger below, and then you're going to drop your limit order further way back to decrease the risk, and the stop loss has to go one tick above the initial signal bar. So if you're going to do double bar entry, you can consider, because you're below EMA, market is very bearish, We need to get new low. Okay, we don't have a new low just yet. First entry short. Second entry short, but it's above EMA. And by the way, this channel, it already played out, so we're not really paying attention to this downtrend, even though you can see some reaction. We're paying attention to this downtrend now. So second entry short was above EMA. Had it been below EMA, we can consider it still worked, but it pushed above EMA. Downtrend still doesn't have new low, so we may get it. And now we have first entry short, pullback, second entry short. It's truly amazing once you get rid of all the indicators and you train your eyes to view prices in their true form, just observing pure price action, that there is reason to every single movement, okay? These channels, there's objective way how to draw them. Market geometry is real, and you can see market moves in these two-legged pullbacks. This is why we're using tick charts. You can still use time-based charts, 1 minute chart, but tick charts are a little bit cleaner. We can see more details, so you can see the two-legged pullbacks. So this is repeat pattern. Second entry short here, second entry short here. It's simple. We need to get new low. This is great hyperbolic setup. Where is my arrow? Right here. Second entry short. Great single bar, closing below EMA. Uptrend played out, 2 legs up. We need to get new low. Lower high would have been okay, but the single bar is bad. New low tested, and now it's getting a little bit too late. There was some decent price action, but it's getting too late. So this is the overall structure for today. Very, very strong downtrend. A lot of setups. I'm gonna wrap it up. I hope you had a good trading day, and I'm gonna talk to you next time. Good luck with your trading.